Good evening, friends. Welcome to this webinar on new ITRs for assessment year 2014-15. I am Rajiv Khandelwal and I will be guiding you through the new forms and the process which needs to be followed. Now let us see for whom filing of ITR is mandatory. As you might be aware that in the case of a company and also in the case of a firm from assessment year 2006-7, filing of ITR is mandatory irrespective of level of income. What about LLP, Limited Liability Partnership? Even an LLP is covered in a firm, so even for a firm and an LLP, it is mandatory to file ITR irrespective of the level of income. What about other assessees? Obviously, for other assessees, we are aware that if income exceeds the exemption limit, then income tax return needs to be filed. Now, does the statement need any more clarification? I guess so. Income before Chapter 6A deductions should be greater than the exemption amount. We should not see before Chapter 6A deductions, rather we should not see after Chapter 6A deductions, but before Chapter 6A deductions, that is all the deductions that we claim in ATC, etc. Before that we should see that the amount should be greater than the exemption amount, then we should file the ITR. And somebody might say that for salaried people with income up to 5 lakhs, there is no need to file the ITR if certain conditions are fulfilled. See, these notifications come for a particular year. In the past few years, the government came out with these notifications, but as of now, no such notification exists for this assessment year, and therefore, even for salaried employees with income up to 5 lakhs, they have to file ITR. Due dates, I think we all are aware that for company it is 30th of September, for persons subject to audit under Income Tax Act or any other law, or also a working partner of a firm subject to audit under Income Tax Act or any other law, the date is 30th of September. For other salaried employees and non-audit cases, it is 31st of July. Any other date? Yes, we have another date which is 30th of November. Persons who are supposed to get the transfer pricing audit done, including domestic transfer pricing in Form 3CE, they need to file return by 30th of November. And please note that if the Office of Income Tax Department is closed on the last day for filing ITR, it can be filed on the next working day. We have Circular 639 of 13th November 1992, an old circular, which says that. So even in the case of transfer pricing report, we have the date falling on 30th of November falling on a Sunday. So in that case, it can be filed on the next working day. E-filing of ITRs. Obviously, most of us are now filing income tax returns electronically only, but we need to see for which assessees it is mandatory. First of all, e-filing of ITRs with digital signatures. In the case of a company, an individual HUF or a firm to whom tax audit is applicable, and also from this year a political party. All these have to file income tax returns in the respective forms using digital signature electronically. What about other assessees? As we can see, a charitable trust which has to give notice of accumulation of income in Form 10 to AO. Also, other firms, even if tax audit is not applicable. Individuals, HUF, proprietorships where e-filing of any audit report is mandatory. Then individuals, HUF claiming any relief of tax under Section 9090A or Section 91. And resident individuals, HUF having foreign assets or signing authority in any bank outside India, and any other assessee other than trust if income exceeds 5 lakhs. In all these cases, please note that income tax return has to be filed electronically. Even if you are able to submit the form manually to the Income Tax Department and it is accepted, it will be rejected later because in your case, e-filing is mandatory, so please be very careful. Coming to various changes and important points in these ITRs for the assessment year 2014-15. A small changes there. Earlier it was before due date, after due date. What about if we file on due date? Which one should we check? So now that they have changed it to on or before due date. Then if a person is governed by Portuguese civil code, then in that case the PAN of the spouse is to be given. Then also there are some dubious tax jurisdictions, and if there are transactions with them, the income tax department now wants details of such transactions, and these have to be reported under section 94A. There is a specific column where you have to give information about this, and please note that presently only Cyprus has been notified for this purpose. So if you have any transaction with a resident of or national of Cyprus, then all these transactions need to be reported in this section. Then in the case of non-resident, we have now to inform whether there is a permanent establishment in India or not. So there is a specific column for that. Then earlier also the department was asking whether you are liable for audit under section 44AB or not. Now it is also specifically asking whether the accounts have been audited, because it also asks the date of the tax audit report or the date on which the audit report has been filed. But now sometimes it may not have been filed by the date the income tax return is uploaded. So in that case, it is also asking whether the accounts have been audited. Other important changes: there is now a detailed computation of capital gains, short-term gain and long-term gain on property is to be shown separately. In that case, the stamp duty value of land and building is also to be shown. Other income, normally we had dividend income, bank interest, etc., dividends, etc. But now they are, and for special income we could say lotteries, winning from horse races, etc. But now there is a detailed instruction regarding all the special incomes which also need to be shown separately. These are available in the instructions also and in the schedule SI also, wherein you can select these special incomes on which special rate is charged. And as you are aware, there is surcharge on individuals, HUF, AOP, BOI, etc. if income is greater than 1 crore, and also a rebate under section 87A to resident individuals with income up to 5 lakhs. Then brought forward or carried forward of TDS is to be shown in TDS 2. Another important change that the department has done this year is that refund by ECS has been made mandatory. Now you'll ask why? Because in checks we were facing a lot of problems. Many a time checks were lost in transit. Many a time they were fraudulently encashed. Sometimes even the name or account number was incorrect, so you were not getting the benefit. Sometimes your address was changed. You shifted to another city. The check was delivered at your old address. It was returned back to the department. All those issues were there, and that is why the department has taken this hard step wherein refund by ECS has been made mandatory, and for that it is mandatory for you to mention your bank account number, which should be minimum 9 digits as per the core banking solution of the bank. You have to mention the IFSC code instead of the MITR code, and also have to mention the type of account, that is whether it is savings, current or cash credit. So please take in advance all these details from your assessees. Now another important change that the department has done this year is that, as you are aware, that you have to give your mobile number and the email ID in the income tax return. Now the department has made mandatory that one email ID and one mobile number can be used maximum for 4 assessees. I think they have taken the clue that normally husband, wife is there and 2 children are there. So it is allowing for maximum 4 assessees. It is not allowing beyond that. And earlier you could just remove this pop-up, and later on you could do your other work. But recently they have now made it mandatory to make the changes. Then only you can proceed from here. So it is very important for you to change. Obviously CAs will be facing a lot of difficulty in this, because all the communication is being done through mobile and email ID. And though there is an option of a secondary email ID and mobile number, but generally the clients are not aware or they do not understand these messages which are being sent by the income tax department, and therefore CAs are mostly putting in their mobile number and email ID. So now probably we have to go for another mechanism wherein we can make email IDs of the clients and also manage them. So we can probably do something about that. Coming to the individual income tax return form, SEHJ or the ITR 1, as we are aware, it is not applicable where there is loss from other sources. Some relief has been claimed under section 1990A or 91, and for residents and ordinarily residents, there are some foreign assets, or the person has check signing authority of any bank account abroad, or if any exempt income is there which is exceeding 5,000 rupees, or even if any capital gains is there. In all these cases, ITR 1 cannot be used. ITR 1 again, continuing with that, what about TDS on property? Because section 194IA is also applicable. So in some cases at least, though capital gains are not there in this form, but in some cases probably some property may be sold and he may be having a share in that, the assessment may be in somebody else's name. In all those cases the problem will be there that he needs to show the TDS on property here, but ITR 1 has no column for this. Similarly for TCS, now TCS again you will say is applicable for business assessments, but remember that now even in the case of cash purchases of gold ornaments, bullion, etc., TCS is to be applicable, and in that case TCS needs to be shown, but there is no field in ITR 1. Probably we'll convey this to the income tax department so they can make the necessary changes. Another thing is that there is no PAN in verification in ITR 1, but it is there in XML. And then also, see, ITR 1 is made first, then ITR 2, ITR 3, that way they are making the various ITR forms. So the later forms, many mistakes are rectified which are there in the earlier forms. So in ITR 1, if you see the scheduled TDS, there is no field to claim TDS of earlier years or carry forward of current TDS, which is there in the other forms. But in the XML, I think they have made this correction. The next simple form is Sugam or ITR 4S. In the case of presumptive businesses, again it is not applicable. If the relief under section 1990A or 91 is being claimed, similarly if there are some foreign assets, the check signing authority abroad on any exempt income greater than 5,000, 4S cannot be used. Coming to ITR 4, as I said, they are making changes one by one in 1, 2, 3, 4. Then some mistakes or issues are there, they make the rectifications in the later form. So all the corrections or the improvements that were done in ITR 5 last year, many of them, particularly in the case of profit and loss accounts, have been brought to ITR 4 also, which is applicable in the case of proprietors. So new fields have been added in this form. If liable to furnish other audit reports, date of furnishing audit report under section 92E, 115JC or others, that is there. Similarly, in the case of sales or gross receipts of business, the breakup is to be given or bifurcation is to be there in the sale of goods, sale of services, other operating revenue, and if there is any other income, the nature and extent or the amount has to be specified here. Similarly, closing stock or opening stock, the breakup is to be given in raw materials, work in progress, finished goods. Similarly, bad debts claimed, you have to give the debtor PAN for bad debts exceeding 1 lakh rupees. All this was there in ITR 5, 6, etc. It was not there in ITR 4 last year, but it has been brought this year in ITR 4 also. Schedule IF, information about firm. They will. You also have to mention whether the firm is liable for audit, so that we can know that your return is to go by 31st of July or 30th of September. Then in profit and loss account in ITR 4, you have to disclose separately royalty, professional consultancy fee for technical services, and also disclose certain payments to non-residents separately. In the case of ITR 4 also this year, salary, commission, royalty, professional consultancy fee for technical services, interest, etc. Then traveling expenses have to be bifurcated into foreign and local, And rates and taxes will now include commodity transaction tax also, besides security transaction tax. Similarly, there is a breakup of other expenses is to be given. Coming to changes in ITR 5. Now, another very important change is that in the case of ITR 5, you have to give the LL PIN also. In the case of limited liability partnership, the LL PIN has to be given. Similarly, the DPIN or the designated partner identification number is to be mentioned in the ITR. This will help the department do the linking with the data that you are furnishing to MCA. Till now, there was no linking because this important piece of information, very simple thing, was not being asked. But now it is being asked and the linking will be possible, so need to be more careful. Another change that they've done is that in ITR 5, we also have to use ITR 5 for private discretionary trust also, which normally till now we was being assessed as individual and we were filing ITR 1, 2, 4S or 4. Please remember that for such private discretionary trust, now we have to file ITR 5. And in the status also ITR 5, you can see private discretionary trust is there. Similarly, in ITR 6, if you see, the company SIN or the corporate identity number is to be mentioned. Similarly, DIN or the director identification number of all the directors has to be mentioned. Again, this will help in linking of the data available with MCA with Income Tax Department. There's also a thought of using the data in XBRL, the filing in XBRL that is being done in MCA, to use the same in ITR 6, and probably you may not be asked to file the balance sheet, profit and loss account again here. That is a thought, but let's see when it materializes. So purpose is that. ITR 7 for trust, societies, etc. In the case of details of projects or institutions, some new fields have been added, that is approval or notification or registration number, approving or registering authority, and section under which exemption has been claimed. Then institution-wise breakup of aggregate receipts from trade, etc. when it is being carried on. And there is a schedule VC of voluntary contributions from foreign or from local and anonymous also. So with the specific changes, now let us move to general changes in the ITR. Coming to TI or total income, here the capital gains have to be given short-term and long-term rate-wise. Earlier it was not that there, but now these have to be given rate-wise in most of the forms. In the earlier one, etc., probably it is not there because till that time the change was not made. But in all the subsequent forms, it is to be given rate-wise. Then deduction under section 10A or 10AA in the case of SEZ or free trade zone, etc., that has been shifted from schedule BP to TI. Please note that change. Then special income in TI, they are asking 2 times. Probably they want to ensure that you are giving the correct figure, so they are asking it twice. So please give this information twice. Other information in the case of audit cases, some new fields have been added. Disallowances under section 36 and 37. Contribution to the pension scheme under section 80CC-D. If there is any disallowance, it needs to be mentioned. Disallowance of STT payment on security is not included in business income. Expenditure relating to capital nature. Expenditure not incurred wholly and exclusively for business or profession. The earlier field, in the earlier form, you could see the field was amount of expenditure in relation to income which does not form part of total income. And now we have to give expenditure not incurred wholly and exclusively for business or profession. What more changes have been done in other information? The TDS disallowances have been bifurcated. Interest, royalty, fees for technical services, etc. to non-residents without TDS, that is section 40A(I), that has to be given separately. Amount paid to residents without deducting TDS has to be given separately. And salary paid to non-residents without deducting TDS under section 48(3), that has to be given separately. Earlier there was just a single sheet wherein you had to give this information together. Then also we have to show disallowance of royalty, license fee, service fee, etc. levied by state government undertaking by state government. This is a new field which is applicable from assessment year 14-15. So if there is any disallowance for that, we need to show it separately. Coming to Schedule S of salary, it is now more detailed. Earlier we just used to give the figure of exempt allowances, the total amount. Now the breakup has to be given in leave travel allowance, tax paid by employer on perks, house rent allowance, and the remaining allowances have to be clubbed together in other exempt allowances. From where will we get this information? We will get all this information from Form 16, except for tax paid by employer on perks. That will be available from Form 12BA, which is the form of tax deduction in the case of perquisites, where all the details of the perquisites for salaries exceeding 1,50,000 has to be given. From that we can get this figure. Schedule HP or the house property. The total income from house property is to be given, including share of co-owners. I think there was some confusion. Some people were showing it total, some people were giving their own share. So now they have made this change that now you have to show this total income including the share of the co-owners, and in the last you have to give the total house property income multiplied by your own share, and that will be your income from house property on which tax is to be levied for you. Then PAN of tenant, if the property is given on rent, that is optional till now. PAN of any other person needs to be given. Yes. PAN of co-owner, if any, is now mandatory. Now 2 or more owners are there of a property. Each co-owner has to give the PAN of the co-owner also mandatorily. What about if the co-owner does not have PAN or does not provide PAN? Now sometimes the co-owners may not be even on speaking terms what to say of sharing their PAN, what is to be done, but the department has not given any relief, so there will be some representation needs to be done or given to the department to relax this, because it may be a genuine problem in many cases. But as of now, this is mandatory and please try and get it. Coming to Schedule BP or Schedule of Business and Profession, the income or receipts credited to the profit and loss account considered under other heads of income. Now the breakup is to be given separately under salary, house property, capital gains and other sources. Similar breakup has to be given for expenses also. The breakup of other exempt income also needs to be given. Whenever the figure depreciation has been used, they have added the word amortization also. Basically, depreciation is for tangible assets and amortization is for intangible assets like patents, goodwill, etc. Not much of a change. Deemed income under section 40A, subsection 3, capital A, which is item 21 of Schedule BP, which is cash payment for provision of earlier years. You need not just show the disallowance of expenses paid in cash, etc., exceeding 20,000, even if in an earlier year had made a provision, and for now for that you are making cash payment of a provision of an earlier year, this allowance needs to be done for that also and needs to be shown separately. Then deemed income under section 43CA, item 22, stamp duty valuation of property held as stock in trade needs to be given. Then any other income not included in profit and loss account. Now this text has been changed. They have added any other expense not allowable. Many a times we were just wondering where other expenses which are not to be allowed needs to be shown. So now they have specifically written here any other expense not allowable, including salary, etc. of partners, etc. Then deemed business income under 43CA, calculation of profit on sale of land or building. And here in consideration you have to show higher of the stamp duty value and actual consideration. Then they have given another table which is intra-head set-off of business loss. If there is set-off of business loss with other business gains, this table has to be filled in, wherein first of all you have to show the losses if any, and then at the bottom you have to show the profits of the businesses from speculative business, other businesses or specified business, and then this setup of losses needs to be done. This probably the department has given because sometimes people were doing mistakes in this. That is why a separate table is there. Then comes another important schedule, which is schedule of capital gains, schedule CG. Again, it is more detailed. Again, people were doing many mistakes in these schedules. So now the breakup is to be given. There are 6 items in short-term capital gains, as you can see, and a separate rate is there for each item, and it has been explained. Sale of land or building is to be shown separately. Sale of equity shares has to be shown separately. Sale of debentures or shares of an Indian company purchased in forex, or sale of other securities, item number 3 and 4, please note, applicable only in the case of non-resident. Then sale of other securities, sale of other assets, amount deemed to be short-term capital gain under section 64B. All these items need to be shown separately, and please note separate rates of tax or slabs which are applicable to each item. Similarly, for long-term capital gains, there are 8 heads under which you have to show. Again, land and building needs to be shown separately. Bonds, debentures need to be shown separately. Listed securities, coupon rates, etc. Then items 4, 5 and 6 are applicable to non-residents only. 7 and 8, sale of other assets and amount deemed to be long-term capital gains may be applicable to any assessee. Please ensure you are giving the correct information under each head, otherwise there could be double taxation, etc. Then another important schedule is set-off of capital losses and gains. Again, many of us were committing a lot of mistakes in this schedule. The amounts were not being set off correctly. As you may be aware that long-term capital loss can be set off against long-term capital gain only, whereas short-term capital loss can be adjusted against long-term capital gain or short-term capital gain. Many of these rules are there which we need to do carefully so that we do not commit mistakes. But in many cases we were doing these mistakes, and the department it was not getting all this information because it was not being asked for, and therefore we were not furnishing. Department was not clear. Department did not know whether these were calculated correctly or not. That is why this schedule is to be filled now, in which, as you can see, short-term capital loss for 15%, for 30%, applicable rate, long-term 10%, long-term 20% needs to be shown separately. The losses need to be shown separately. Then the gains need to be shown separately under all these heads, and then the set-off needs to be shown separately, and in the end whether any loss needs to be carried forward if it has not been set off, or any capital gain which remains after set-off and which needs to be taxable for this year. Please do this very carefully, otherwise again there is some double taxation, etc. may be there. Now another important thing, details of exemption is to be given. Earlier you just need to give the amount of cost of the asset, etc. Now the cost of the new asset, date of acquisition or construction, amount deposited in capital gains account scheme before due date, all this information needs to be given for each asset. Please do it religiously. Because again, in these cases people were doing mistakes. They were claiming exemptions wherein probably the date was not correct, probably the period has expired, but the people were still claiming, and the department, since it did not have this information, it had no option but to allow, except for scrutiny cases where all these details were being asked for. But now the department will get all this information, and then it will be able to see whether this allowance needs to be given, whether the exemption or deduction needs to be given or not. Then even in CYLA, current year loss adjustment or brought forward loss adjustment, this bifurcation of capital gains needs to be done in short term and long term, and rate wise also. Other incomes. As I said, other incomes, all this breakup needs to be given. In general cases, all these items are not applicable, but in the items in which it is applicable, it needs to be given. Probably 32 heads are there. You can see that. Please ensure that the correct code is given. If the incorrect code is given in the XML file, probably if you are giving code for item 1, which is the code is 1, if you are giving for winning from lotteries or crossword puzzles, it will apply rate of 30%, even if the rate is 1% or 10%. So please be very careful that the correct code gives. All these you can see, 32 items are there. Only the relevant one needs to be selected in Schedule SI. Coming to Schedule 6A, another important schedule of deduction. Now the breakup of deduction needs to be given. Part B is in respect of the most common deductions, which is under 80C, 80D, medical insurance, etc. and most other deductions. Part C is in respect of certain income applicable in the case of generally business, etc. ATIA, ATIB, etc. All these cases generally not applicable to individuals. Then Part CA and Part D in respect of certain other incomes or other deductions, like ATTTA in respect of savings interest up to 10,000 and ATU in the case of handicapped people, etc. So this bifurcation needs to be given now in the return form. And please note that even if you are filling just the actual amount that you have spent for these deductions, in the XML file both figures will go. The actual amount, probably for PPF you deposited 2 lakh rupees in PPF or PF, but only the allowance will be up to rupees 1 lakh. But in the XML file both the amounts will go. So please ensure that the correct amount is being given. In the XML file, you should not claim 2 lakh rupees, otherwise there will be a problem. Then deduction under section 80EE for interest up to 1 lakh paid on home loan borrowed by certain first-time home buyers is also to be given, which is a new deduction from this year. Coming to Schedule 80G, it is not there in ITR 1 and 4S in the physical form, but in XML this detail will go. And in the last year many cases have come to our notice wherein 80G deduction has been disallowed. Why? Because details were not given in Schedule 80G. So please ensure that you do not fill the figures of the deductions not only in Chapter 6A deduction schedule but also in the relevant schedules like 80G, etc. Otherwise demand will be there from the department. Then in some cases you are claiming deduction under section 80G in the case of donee funds set up by government under section 80G subsection 2. In these cases probably you don't have the PAN. In such cases please put the PAN as 5 times capital G, 4 times 0, and then in the last again G. This is 10 characters and digits. So you need to put this PAN in case of donee funds set up by government. Coming to another schedule applicable in the case of ITR 6, which is Schedule BBS. This is a new chapter under Chapter 12BA in Finance Act 2013. There are restrictions on buyback of shares among closely held domestic companies, and the company has to report the buyback of shares during the year in the Schedule BBS, and the details of tax distributed on this distributed income on buyback of shares need to be disclosed in ITR 6 as you are disclosing in other cases of distribution of dividends. Similarly, details have to be given in Schedule BBS also. Coming to important schedule TDS 2, some new fees have been added applicable in the case of non-salary like interest, etc. Unclaimed TDS brought forward has to be given, and the financial year in which deducted was already there. Amount brought forward also needs to be given, and the TDS of the current year also needs to be given separately. Please note. Then amount claimed this year in own hand, and in the case of hands of spouse, section 5A is applicable in the case of residents of Goa, which Portuguese Civil Code is applicable. In that case, that needs to be shown separately. And the amount carried forward, if the TDS still remains and you need to claim it in some future year, that needs to be shown separately. And then sometimes there is confusion that deducted year, which year has to be written for 2013-14? Please note that for financial year 2013-14 or assessment year 2014-15, we have to write 2013. That is, the first year of the financial year needs to be written here. What about schedule TDS on 3 on property? Section 194A. The TDS is deducted 1% there also. So where do we show that? In the forms, the department has not made the change. In the physical forms, no changes there. But in the XML format or the electronic format, they have introduced another schedule TDS3 wherein this detail will go, which you can take from Form 26QB that has been issued by the seller of the property. And in the physical forms, put this information in TDS2 only, and there instead of the TAN, you have to give the PAN of the person who has deducted tax. So please be careful about this. Schedule TCS, it is not there in ITR 1 and 2 as I told you before also, but if this detail is there, one needs to give that, and department needs to correct that. Then the TAN of the collector is to be given, name, financial year in which collected, TCS of current year, and the amount claimed this year. These details have to be given in schedule TCS also. Then schedule AL of assets and liabilities. This was introduced last year. This is there in ITR 3 and 4 this year also. And it is applicable if the taxable income is exceeding 25 lakhs. And we were saying that why asset criteria has not been used in such cases, but the department in its wisdom has used the income criteria only. And here the details of the personal assets have to be provided and not the assets of the firm. So, and as the wealth tax returns, electronic filing was not made mandatory. Probably that was why they had asked for this schedule AL last year, and this has been carried forward. And just 2 days back we had this notification whereby e-filing of wealth tax returns has been made mandatory in some cases. Now already schedule AL they are asking for information. They have also made filing of wealth tax returns mandatory. In many of the cases, people may end up filling the information at both the places. So let us see the details of this now. First of all, when wealth tax return is to be filled, it is to be filled when the net wealth exceeds 30 lakhs, and in that case, on the net wealth exceeding 30 lakhs, tax or wealth tax of 1% is to be levied, and the wealth tax return is to be filed. So provision for e-filing came in Finance Act 2013 itself, and from financial year, or rather assessment year 2014-15 onwards, Form BB is to be used. The new Form BB is to be used, and up to assessment year 2013-14, Form BA is to be used. Why two forms? Because now if you are filing Form BB, e-filing or physically filing this form, and then notices come to you for filing the forms or returns of earlier year, which form to use? So the department has kept the other Form BA also. It has not abolished that form, which can be used for earlier year return. And e-filing is mandatory from assessment year 2014-15. Digital signature is to be used for e-filing, and the return, if you see, it is more detailed as compared to the earlier return, because now we have more annexure-less returns. We have annexure-less returns. That is why, since annexures are not supposed to go, since the valuation report of the valuer is not supposed to go, so the department has put in all this information in the form itself. So that's a disadvantage of having annexure-less returns. About mandatory filing, if we see for assessment year 2014-15, it is mandatory for companies, individuals subject to tax audit, and also HUF subject to tax audit. In most of the provisions in income tax where e-filing is mandatory, we have to see for the last year. But since wealth tax return is to be filed after the end of the year and so nothing has been specified, we have to see for current year only. So if tax audit is applicable in the current year, then for these people e-filing is mandatory. Otherwise, exemption for this assessment year 2014-15 has been given to individuals at HUF not subject to tax audit, and in such cases they can file paper returns, but it is optional for them. If they want, they can go for e-filing also, but it is e-filing is not mandatory for this specific assessment year. For the next assessment year, we may have a different rule, we may have a change. We have a schedule IP, which is details of immovable property. Let's see which all properties have to be given. Any residential or commercial property, including guest house, any farmhouse within 25 kilometers of local municipal limits, any urban land. Please see the relevant section 2, subsection, the relevant subsection for the meaning of urban land, which change in which was done last year. Then some properties are exempt from being given in this schedule. You have not to give details of these properties, like if some residential accommodation has been provided to any staff, including directors, having salary, gross salary not exceeding 10 lakhs. In the case of business, house held as stock and trade, house used for business or profession, a residential house property let out for minimum 10 months or 300 days, or a commercial complex, because generally assets which are productive, they are excluded from wealth tax. So that is why information about that is not to be given here. Now, in valuation of property, generally till now we were using the mechanism of capitalization of debt maintainable rent. But now in the form, if you see, they are also asking for name of registered valuer, registration number of valuer, and date of report by the valuer. Why we need to get this valuation report from the valuer in the case of property? No relevant changes have been done by the department in this regard, but this information is there. Let's wait for some more information from the department in this regard. But till now, the calculation needs to be done on the basis of capitalization of net maintainable rent. Then let's move on to schedule MP of movable property. Details of all the expensive cars that you are having these days, details of your boats and aircraft, etc. for those who possess them, who own them, and also cash exceeding 50,000 rupees needs to be given here. In earlier schedule, even the details of jewelry had to be given here, but that has been excluded from here. And details of that has to be also to be given. Details of jewelry, bullion, utensils made of gold, silver, other precious metals, etc. And earlier, if you remember, up to 5 lakhs, there was no need to get a valuation report from a registered valuer, and only a statement in form 08A signed by the assessee was sufficient. And in case of value exceeding 5 lakhs, a valuation report of the registered valuer in form 08 had to be given. Once in 5 years that has to be taken. Form 08A, if you see, it contained all these details: description of item, gross weight, net weight, description of and weight of precious or semi-precious items, etc., value of each precious or semi-precious stone, etc., total value of jewelry. And we also know about the valuation report from 08, which were more detailed, all the information which was there in 08A, that, and also other details like this, name of registered valuer, etc., date of audit report. Now we have another schedule JE of jewelry. For each item of jewelry, we have to take valuation report from the valuer, and this needs to be filled in schedule JE, because no annexure of valuation report is to be there. And let me tell you now, this needs to be filled irrespective of value. There is no threshold of 5 lakhs, and this needs to be filled in case of all the cases in schedule JE. So please take this information, please calculate all these figures because they need to be given in the wealth tax return. The next schedule, the important one, is schedule OPR of other properties. In other cases, we have to give the market value, but in this case, the values have to be given at cost. Please note it is applicable to individuals and HUF only, not applicable to companies. And details of properties other than that given in schedule IP, schedule ACE, which is assets claimed exempt under section 5, which was being given earlier also, assets outside India, and assets of business or profession subject to tax audit. Details of properties other than all these properties need to be given here. Thirdly, department needs to get more information regarding taxability, and probably you think that these properties are not taxable. The department needs to see itself that whether these are taxable or not. So it needs additional information about these properties. Not only properties, but also immovable property like agricultural land, not agricultural land, commercial building, residential building. You have to give the description, complete address, survey plot number of land, etc. And immovable property, all kinds of properties here: bank deposits, deposits with NBFCs, etc., bonds, debentures, shares, units of mutual funds, NSS, postal savings, insurance policies, loans, advances given to firm, company, trust, etc. Other receivables from debtors. Even receivables from debtors. Now one fails to understand what other receivables from debtors means. Either it is receivables from debtors or total receivables from debtors. What other receivables from debtors we need to understand from department, but the department needs to know what are other receivables from debtors. Probably some receivables from debtors which are not there in the book. One doesn't understand. So more clarification needs from the department. And then any other property, howsoever small it may be, immovable property, you need to mention the value, including value of claims, interest, etc. So please, ladies and gentlemen, get ready for this, because this is a mammoth task, and probably many of your clients are going to come into this next. So let us all prepare ourselves for this huge exercise. And probably the linking with ITRs will be there, because if you have all this property, why is that you are not filing income tax returns? So if you are filing income tax return, the department will see why you are not filing the wealth tax return, because in schedule AL you are showing property, by virtue of which it seems that you should file wealth tax return. If you are filing the income tax return and vice versa. So the department is trying to catch you from all the sides. So if you are showing value of these items in the wealth tax return, why is that you are not filing the income tax returns for the past so many years? So please be very careful in filing all this information. Then PAN of some other persons needs to be given. Person whose wealth is included in your wealth tax return, schedule INW, and also firm AOP in which interest is held as partner or a member in schedule IFA. So please take PAN of these persons because it needs to be disclosed. Now, many a times we are filing these returns without even understanding what the consequences of what we are signing or e-filing. So what are the consequences? Let us see. If there is a tax evasion up to 1 lakh, there is rigorous imprisonment from 3 months to 3 years. I repeat, rigorous imprisonment, which is called Qaid ba Mushakkat, and fine also. And if tax evasion is above 1 lakh, then rigorous imprisonment from 6 months to 7 years, and fine also. So please ensure there is no false statement in the wealth tax returns, even in income tax returns also. I don't want you to fear all these things, but that is the hard reality, and we must be aware of that. So better be safe than sorry. Yes, let us tighten our seat belts, because otherwise problems could be there. Coming to what caution we should take in various schedules, etc. Quickly we'll go through these, and very important. Part A, personal information. The name should be as per the PAN database. Date of birth, please ensure it is correct. Particularly in the case of senior citizens, if you put in just some date by virtue of which the person is not a senior citizen, he will not get the benefit of a senior citizen and higher tax would be levied. Then due date of filing, please put that correct. If you are putting as 30th September and audit under section 48AB is marked as N, then probably you'll be assessed as if the date is 31st of July, and in that case interest will be levied after 31st of July. Similarly, if you are saying that when it asks you that whether you are a resident or not, you say no, then the benefits of resident will not be available to you. Similarly, if the status is incorrect, like in the case of a cooperative society, if you do not give the correct status and you claim deduction under section 80P, it will be disallowed. Similarly, sometimes you are filing wrong ITR, like in the case of trust or society registered under section 12A. You may be using, some of you have used ITR 5, which is not correct. So please ensure that we are using the correct return. Then in the case of AOP, if you are not giving the percentage of share of members, then you will be liable to be taxed at maximum marginal rate, as the department probably would think, or the software would think of the department, that the shares are indeterminate and the tax would be at maximum marginal rate. Please ensure that either the software that you are using is ensuring all these things, or be very careful, check each of these things very carefully. Because good software, they are using these things inbuilt. They are building these things in the software itself so that you do not commit these mistakes. Then coming to TI or total income, mention CYLA or BFLA laws in the proper rows, otherwise it will be disallowed. I will repeat and I will say again and again that please ensure that data seamlessly flows from one annexure or schedule or item to TI, TTI seamlessly. It should not be there that some item, the same value is appearing in a different amount somewhere and in a different amount somewhere else. It will be disallowed. Prime examples being ATG deduction, which has been disallowed in many cases because the schedule ATG has not been filled, whereas data has been given in chapter 6A. So everywhere the value should be same of the same item, otherwise loss will be disallowed, otherwise the item will be disallowed. In the case of loss, again talking about TI, in the case of loss, the value for particular income should be, if it is item is 0, if there is a loss in the case of any item, then the value needs to be shown as 0 and not in negative. Such losses should be indicated against the item losses of current year to be set off. The negative values of the losses should not be shown separately under each head. In TI, they should be shown as 0, and all these should have been clapped together and shown under item losses of current year to be set off. Then there should not be any difference in income shown in Part B TI and respective schedules, and MAT credit claimed in Part B TTI, and some people do not fill schedule MATC. That should not be there. It will not be allowed. Tax credit claimed in Part B TTI without filling up schedule TDS 1, TDS 2, TDS 3, TDS and IC, etc. It will be disallowed. Please fill these schedules also. Profit and loss account. In profit and loss account, again serial number 2, any other income, the assessee enters negative value. Please do not put a negative value. It should be shown in expenses, etc. Because the system will ignore it and it will consider it as income. Losses are not to be shown here. Income from business has been considered twice if assessee fills both profit and loss and information in no account cases, so don't do that. The important ones we'll take because time is short now. The salary should tally in schedule S. The salary which is entered in TI under salaries and schedule TDS, give breakup of salary correctly and that of exempted allowances. Schedule HP, please mention all the details, important details, including whether it is let out, etc. Entering only the profit and loss details makes it incomplete, and the loss in such cases the system will presume that it is self-occupied property, and loss will be interest will be allowed to the extent of 1.5 lakhs only. Again, capital gains, all these details need to be mentioned carefully, and we've discussed already in schedule capital gains. Please do that carefully. Schedule PP, again please ensure the items flow seamlessly from one item to the other, and there should not be any difference in depreciation put in profit and loss account, or that in schedule DEP or DPM or DOA. So please be careful about those. Then schedule UD on unabsorbed depreciation. Please note that this schedule is not linked with schedule BFLA. Merely give the breakup of unabsorbed depreciation in BFLA, and the figure of business loss in schedule BFLA should include unabsorbed depreciation also. Chapter 6A or schedule 6A, separate schedules need to be filled. We have already talked about that. Setup of losses, please ensure that this is being done correctly, and speculation loss cannot be set against non-speculative business, so that should not be done. And sometimes the year of loss is not mentioned correctly in CFL. Please ensure that. Correct codes should be used in schedule SI and EI. Please ensure that. Schedule TDS and TCS, maximum problems of demands are coming because the correct data is not taken from schedule 26AS. Please ensure that is done. And schedule IT, the date of the format should be correct as DDMM YYYY, and exact amount should be claimed. So what is the way ahead? Way ahead is that you should use a good software. A good software, either way, you should be careful about all these things which I have just now told you, and many more things. Because time is short, I cannot talk in detail about them, and many other cases practically which you will fulfill. Each and every return, each and every field you should check carefully, personally. If the people, junior people at your end have done, check each and every field, each and every return. And if you are unable to do that, please ensure that you are using a good software which is ensuring at least most of these things. And if you are not doing that, there will be problems, there will be more demands, there will be flood of notices from the income tax department. And beyond that, these are the normal things that we all know, that we should check that all the recent amendments applicable to the client have been taken into account. We should prepare a checklist for the client which needs to be sent to him so that he can update all this information. We should compare data received with the previous year's returns. We should check the specific items of the current year vis-a-vis the last year's. We should review the personal and the bank accounts, credit card statements, etc. We should reconcile the entries with Form 26AS, etc. The brought forward losses have been taken into account correctly. We need to see that. We should make a note in the working papers file on issues of disagreement with the client, so that at a later date there should not be any confusion. We should check the mandatory e-filing fields, and we should not leave them blank. Most of these will be taken care by the e-filing utility of the department, which will check that whether it is mandatory or not, but sometimes it is not taking that. Even those fields we should ensure that they are going, and we should make a list of e-filing cases. All these cases where the expected income this year, even if the final income is not available, if it is expected to exceed 5 lakhs, all such cases we have to do the e-filing. And all the cases where e-filing is to be done with digital signature, please ensure the digital signature is registered at the income tax site, and at least by the due date that should not expire. We should mark or make a list of e-filing of other cases also where the assets abroad are there of an assessee, or some check signing authority of an account abroad is there, or some relief under section 1990A, etc. has been claimed. So please make a list of these cases so that by mistake we do not file these returns manually. And management of ITRs, we should prepare a list somehow in Excel or otherwise of all the ITRs which need to be sent in the cases where returns have been filed electronically without using digital signature. All these ITRs have to be sent to Bangalore, and we should ensure that these reach. In due course, this information is, you are also receiving emails. This information is also available in the PAN login. So, and many times we are later on saying that we have not received refund. Our return has not been processed. First of all, at least see whether the ITRV has reached the department or not. All this will not happen unless and until ITRV has been received by the department. So, proper management of ITRV is also very important. And many more things which are there which you need to be careful, and more than me, I think you know, because you've been filing these returns, and you please be careful about those. And now we will take a short break, and thereafter I'll be back with your queries. So please be ready with your queries, and I'll try to answer those. And if time is not sufficient, you can email those queries at the email ID that you can see on the screen, or the email ID that is communicated to you, and then we can at a later time give a reply to those queries. Thank you.